TheoTRADE. This is Don Kaufman. It's September 6th, 2024. Just about 30 minutes to go. It's the cash close here on this Friday afternoon. The S&P's once again taking a hit to the downside. Look, bottom line. Markets just got serious. Let's explain that and much more here on this TheoTRADE weekend update. All right, rather than state the obvious, which is, hey, look, S&P's some sell side activity. Let's really kind of break down on this weekend update the opportunities. I mean, again, to state the obvious, some sell side activity, but how much sell side activity? And moreover, for those of you that are in tune with volatility, you're probably thinking to yourself, why is volatility not rocking to the upside? The bonds haven't really broken much to the upside. I mean, this is a marketplace, okay, that's going to leave a whole lot of questions, and I'm going to try to kind of take you through that. And again, I want you to understand to be on the leading edge, okay, of what is some pretty serious emerging sell side activity. Okay, back to the S&Ps here for just a moment. One of the first things I want to point out, as I said, 30 minutes, maybe 25 left in the trading session right now. Volume is picking up. But before I start to go through some of the bullet points over here, as it pertains to volume, there is an incredible concentration once again, okay, of liquidity and volume. And what I mean by that, when I'm talking about like a concentration of liquidity, a concentration of volume, you know, you can go a little bit off the beaten path here. You look at stuff like Costco, and look, Costco, it's moving, right? It's down some 1%, okay? And there's just no size. There's no volume. Take a look. Don't take my word for it. Look, all right? There's no size. I mean, it's like nothing's going on in here. You look at something like Walmart, right? And I'm bringing up Walmart. Well, why? It's not doing much today. It's down a half. There's no volume whatsoever in there. I mean, this looks like last week. Nothing was going on last week. It's a concentration of pressure right now. And the pressure, okay, it's on. And it's not wild or extreme even in NVIDIA. NVIDIA's seen a lot days recently that had a lot more activity in them. Then you look at something like Tesla. Okay, Tesla's getting it done. Okay, you look at something like Meta, it's down 3%. Again, fairly quiet. The concentration that we're seeing right now, though, is towards some of the major index products. But look, the one thing that this screams is that sell-side activity is starting to kind of knock on the door, but the door has it just hasn't swung wide open yet. And I think some people that are market technicians may disagree. They would look at this and be like, no, the S&Ps are getting crushed. Forget about what you see on the chart, okay? In terms of volume and some of the liquidity, it's not there. And it really, first of all, leaves something to be desired in here. It's a little nerve-wracking when you're seeing, you know, the SPOs, the S&P futures down, okay, to the extent that they are this week. And meanwhile, I'm telling you, like, look, the door is not flung wide open into sell side yet. That, okay, still remains to be seen. And that's the starting place. That's exactly why this weekend's update is markets just got serious, because I'm looking at this and I'm trying to, all right, you know, there's no size. You want to feel intensity to trade. You want to feel, okay, like there is no tomorrow in the marketplace, because that's the only way that you can have degrees of capitulation. Okay, and I'll be very frank in saying, you know, we're not there yet. We're not even close. And this just looks like the beginning. Again, you have to see this incredible, like almost like an avalanche, if you will, of volume and liquidity. And right now it's incredibly, incredibly concentrated. All right, so I wanted to get that out, and that is worth a few minutes of our time, because I am telling you what you will see, maybe even today's close, okay, is surge of size coming into the marketplace, where all of a sudden okay, people start to realize it's on, okay, and you're going to be forced to make decisions. All right, let's move on. SPX and the 3 Sigma Beast has made an appearance. Okay, I want to cruise to the SPX. Normally I save this and reserve this for, it's like one of the last things I always cover. This, you have to cover it up front because what are you involved in? All right. You know, last month, the beginning of the month, we saw a single day of some wild and woolly sell side activity, right? The remainder of that week, we rallied all the way right back to massively unchanged. Bottom line, this week, unequivocally, this is the most serious week that we've seen all year. This was only a 4-day trading week. Okay, I don't know, well, the sell side activity was bigger back here on August 5th. I do not care about a single day. You're getting back-to-back pressure to a marketplace. That back-to-back pressure has actually snapped the back of the SPX. I'm not talking about the technicals. I'm talking about the expected move. What you, in effect, have here, and I'm just going to kind of ballpark you, right? We started the week here in the SPX somewhere right around 56.50. We're presently trading, okay, closer. Let's just round it here to 5,400. So you have this 250 handle move, but okay, we had a $77 expected move that was implied. Do you understand why I'm calling it the 3 Sigma Beast? If you just took $80 and divided it into yada, 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 you see it's 3 sigmas. Okay, it's 3 standard deviations. How often do you get a 3 standard deviation move? Okay, I'm going to tell you right now, you haven't seen one this year. You have not seen a 3 standard deviation move in the SPX this year. And there's some pretty big breaches outside to the upside. Nothing even comes close, though, to this particular move. In fact, you have to start breaking this down. And again, I'm looking to the upside or the downside. You have to start breaking this down into years, okay, to see this kind of action. So when I say something along the lines of like, look, you know, take this very seriously, okay, we're not playing around anymore. This is a 3 sigma move, which means that the SPX, okay, just got cracked wide open. Plain and simple. And again, that's not a technical term. From a quantitative point of view, a 3 standard deviation move against the weekly expected move, okay, is quite serious. You're only going to see that a few times, okay, within years, a few times within years. And I can go back and illuminate every single one of them, but rather than do that, and again, it's just much more about, like, you get it, right? It's statistically significant, okay? It's not about a one-day move. It's about back-to-back moves. And this really comes down to, again, much more serious trade. And at the exact same time, okay, correlation has absolutely picked up inside of the S&Ps. But this is also a rather disconcerting area. As I said, I don't care about what you think about markets right now. I want to make these statements very forward-looking, okay? If you're looking for capitulation of the marketplace, capitulation is like, we're going to bounce. I'm not saying that we can't bounce. You can bounce. But sell-side activity, it's just starting to pick up. What I mean by that is like, oh, this is huge. We're an oversold. Really, you're an oversold? Okay, you're an oversold. Let's just take a glance back at the S&Ps here. In fact, I'll even go to the spiders. Okay, all right, you're an oversold. What, over the last couple of trading sessions? Are you oversold? Okay, when you look at a 3-year, absolutely not. Are you oversold when you look at a 5-year? It doesn't even, register to you. Are you oversold when you actually come to a monthly? It's an absolute joke. Okay. The reason I'm bringing up these longer term charts and asking you, are you oversold? And look, I can bring up every indicator imaginable in here. Look, it's oversold. That's on a 1-year daily. Okay. What does that look like again to a 5-year weekly? Hey, you're just getting going over here. What does that look like to the monthly? Okay. Please, the monthly, you're overbought. The reason I'm bringing that up right now from a technical perspective is I just told you that the SPX, okay, just had a 3 sigma move, right? And that you should pay attention. And that, again, you can say that we're oversold in the shortest duration possible, but in the longer durations, okay, you haven't even begun. It just hasn't begun. And the correlation, You're not there yet, meaning like you want to see like 95 products down. There's nowhere to run to, nowhere to hide. You got to feel that pressure. Moreover, if you take a look at volatility, again, I'm not much of a VIX person, but if you are a proponent of the VIX, it's just kind of picking up a little bit, hitting its stride. So how come the VIX is not freaking out? In fact, the VIX, okay, is going to close just above 22 most likely, but it was even higher the other day when we saw some sell side activity. Why are we not seeing a higher VIX? Because the VIX just recently, okay, saw something that scared it. But the VIX is like a movie, okay? First time you actually see something in the dark, you're like, holy crap! You know, when you get jump scared in a movie. Exact same thing with the VIX. The VIX just saw, something that scared it to death. Right now, it's taking it in stride. That's actually disconcerting as well. Okay. Moreover, if you take a look at the volatility futures, they're really starting to get heated. Now, this is something I definitely look at. Forget about this 12-day volatility future. It's toast. Okay. Got to come a little further out in time. Start looking 40 days out. Look 40 days out. Okay. Look with me here. When you look 40 days out, people, okay, we're in backwardation very quickly. That 40-day vol future, that's the OCT vol futures, they're at 21. NOV, okay, is at 20, and then it drops off even after that. The reason I'm bringing that up is you have to kind of fathom in your head, there's an election coming up in November. It doesn't matter. October volatility now is actually higher. So we've actually flipped over considerably, okay, into a volatility kind of backwardation. So look, newsflash, I'm not telling you anything you wouldn't know by looking at volatility. Moreover, if you look at the VVIX is pretty serious territory. This is something I was actually pointing out in last weekend's video, and I was like, look, it's what last weekend I was calling the suck before the storm, okay? Guess what? You're in the storm right now, for sure. All right, moving past the 3 sigma beasts and getting through that kind of serious nature that the correlation picked up, but we're not home yet. That volatility is, it's lifting its head off the mat, okay? But it's not at that, like, again, impending doom. And you need to understand just that. Why? Because it's an opportunity. Now, before I go any further, I have got to mention some of the commodity markets. Oil, this is not good. Okay, this actually to me screams economic slowdown. Moreover, if you actually take a look, okay, at like Bitcoin right now, that's also getting serious in a hurry. Why am I bringing that up with oil? Because if you look at the oil markets, it screams economic slowdown. If you look at Bitcoin futures, okay, Bitcoin futures are interesting because I believe that Bitcoin is going to take a dramatic hit if the S&Ps take a hit. You're like, well, why? Because it's basically trading now, all right, in a much higher correlation, almost one and the same. And those that trade Bitcoin are usually some what I would call volatile people, high risk trades. And they'll probably have to liquidate some of the Bitcoin to actually cover some of the risk in other positions out here. And the reason I'm really bringing up Bitcoin along with oil is you saw oil take the hit. It kind of screams economic slowdown. Bitcoin just kind of furthers that, where I think we're starting to see some people puke their positions up to possibly finance other positions. Again, not good signs. Like everything I'm pointing to over here, these are rough positions right now. One of the things that also kind of surprises me as I'm talking about like oil, and a slowdown over here, surprises me that you're not seeing, necessarily the big breakout on gold, but that is also relatively close at hand. All right, moving on, okay? One of the things that I always look for, especially in sell side activity here when markets are getting serious, I look for the opportunity. And for me, the opportunity is what is unscathed. I don't want to know what the big sell side activity is. Look, we're going to look around for just a moment. You want to see some big sell side activity? Okay, we can look at some big sell side activity over here. What's taking the hit, right? Is it stuff like Microsoft? Like, all right, look, Microsoft is way off its highs. I just want to bring this up because when we're actually thinking about where we're headed, you look at something like Microsoft. Now it's only up 8%. Okay, on a year-to-date basis. Then we're going to cruise over to Amazon. Amazon's up 14%. Now, how does that compare to the S&Ps? The S&Ps are up about 14%. Amazon's up about 14%. So it's in line. You look at something like Google. Who cares? It's up 9%. So that's not exactly a huge performer out there, right? Then I look at Meta. Ooh, you got me. Meta is only, what, a few days removed from its all-time high. It's still up 45%. So let me tell you right now, Meta's a player in this room. That is unscathed. Meta is unscathed, okay? Taking a look at Tesla. Tesla's actually, well, this has been a wild child on the year. Tesla's actually down on the year. And then, of course, let's bring up NVIDIA. because NVIDIA, all right? I'm going to come back to the unscathed portions of it, but NVIDIA, it matters most. And why does it matter most? Because it's up 114%. There's nothing else, okay, with even close to that market cap, not even close to that market cap, right? That is really the driver behind the S&Ps. Now I'm bringing up Broadcom for a second because Broadcom, okay, just took a pretty dramatic hit specifically today, and you kind of knew that NVIDIA was going to take that hit with it. Broadcom's down almost to the tune of 10%. This is an earnings announcement, yada, yada, yada. Look, move on. I mean, Broadcom was an early kind of nail in the coffin, specifically for today. It was a nail in the coffin for the broader, marketplace because Broadcom, still, $700 billion company. Now, cruising over to NVIDIA. NVIDIA today, okay, is down to the tune of almost 4%. I've actually seen it lower, obviously, earlier in the trading session. But in the bigger sense, when you look at the year to date, it's up 114%, okay? Bottom line, I am not saying that NVIDIA, okay, is unscathed. NVIDIA is starting to take some degree of a hit. But NVIDIA is the player in the room, okay? NVIDIA, and again, I actually want to put price back on here. NVIDIA, all right, could actually be testing some lows, specifically testing through 100 as early as next week. If NVIDIA is down, okay, so goes the marketplace. This is your market right now. Because you're going to tell me, no, Tesla's not holding us together. Tesla's down on the year. No, it's got Meta. Look, whatever Meta's going to do, and that's fine. Like Meta is one of the players in the room. There's no question about it. It's up 45%. But Meta's most likely going to follow some of the AI trade, which is specifically NVIDIA. Okay, but here's another one. Okay, and that is Apple. And Apple could be opportunistic. Apple's up about 19%. But the key is this: it's relatively unscathed. Okay, we're looking like specifically right now, big tech, and that's relatively unscathed. And that, okay, could be opportunistic. You want to see some other opportunistic ones? All right, let's take a look at XLU. Okay, in terms of XLU, and by the way, I'm going to give you guys a little bit of a trade update. I shorted this when? Today. I actually hopped on board literally today. Okay, and that trade is starting to come to fruition. It's up about 24%. And I just literally put that one on today. So XLU. Okay, this is an unscathed sector. Look, if they're going to come for this marketplace and come in a big way, XLU is coming with it. Utilities. You're like, utilities are being used as defensive. Yeah, until they're not. Okay. Next one on the docket, the financials. The financials, and I talked about this extensively in last weekend's update. And if you listened to last weekend's update, you made some money off this. Okay. Short the financials. I shorted the financials in several different ways. One, which was in Wells Fargo. If you missed the Wells Fargo trade, sucks for you. That was one of our in-out spreads, and this was a huge move to the downside. We caught all of that. Take a look. I actually put that trade on right there on September 4th and just closed out of it. I mean, that was a huge one. We also actually took advantage of an IWM position. IWM, okay, got whacked back. But right now, okay, that's just updating you on some trades that I've taken. The one that I'm really looking at, okay, outside of XLU, which I just put myself into, okay, and I'm already in a short position in the financials. The one that I really like right now, okay, is here. Look at this. XLP. Anything involving like Walmart, some of the consumer staples, okay, they're not going to make it through this, as I say, unscathed. Like I'm looking around the tape over here and I'm like, well, what's up today? Like what could I possibly take advantage of throughout the course of the day? Walmart's huge. Look at even Target. Now, Target has taken a little bit of a hit, but even in today's trading activity. But then I thought to myself, why have the single stock risk? Why not just go after the ETF? And here it is, XLP. That's opportunistic. Apple could still be very opportunistic, and I'm already in a short Apple position. Okay, I like to short stuff in a marketplace that's incredibly weak, because if this market's going down, you better believe it's going to bring consumer staples with it. Okay, what do you think? It's not going to hold up. All right, onward and upward from there. So I had already closed my Wells Fargo trade. I already closed an IWM trade profitably. I'm short in the financials, okay? And I just shorted in the utility sector, all right? What am I again eyeing? Right here in the XLP. That, okay, is just kind of a brief trade update. Last, but definitely not least, let's go back to the S&Ps, okay? Because again, broader S&Ps, the opportunity right now is pretty dangerous one. Again, if you're looking at this from kind of a market technician perspective, it's a precipitous drop. We just came off the edge of a cliff. Right now, all right, and I want to take you into a little bit of a different chart in here too. Let's go to a 30-day 1 hour, okay? We're in the middle of nowhere. I just want to bring it up. It's a 30-day 1 hour chart. I'm also going to take you into a 180-day 4 hour, okay? We're in a little bit of a free-for-all right now, and I'm actually going to come in here to futures. I'm going to adjust for contract changes, hit apply, hit OK. I want you to see this, okay? When you talk about like support and resistance, there's nothing out here right now, okay? This is where you have to start to think about like, wow, could we actually test all the way back down to the 5,200? I have an answer for that, and the answer is absolutely easily. This is actually the spot, okay, where the marketplace a month ago broke away to the downside, and you get a good feel for that. Okay, when I say a breakaway to the downside, you get a very good feel for that. Now, we're looking into next week. We start looking into next week, you have to start to look at the economic calendar, okay? I don't believe that some of the economics, and the data drops are going to have as much of an effect as they did this past week. I mean, non-farm payrolls, look, the non-farm payrolls is kind of a non-event. There was a lot of Fed speak going on over here, but the Fed's going to very soon go into the quiet period, okay? Because the Fed meeting's coming up September 18th, but there's enough, like any economic data that comes out. And again, it's a fairly light week coming, but even stuff like, an ECB announcement or jobless claims could actually send this marketplace into a tailspin. Import, export, or like consumer sentiment, you have to look at every single data drop plausible coming into this next week, okay? And of course now, everybody wants to talk about like, inflation and so forth. Look, okay, with all due respect, at this point, okay, push it aside because that's already in the Fed's kind of quiet window. And ultimately, though, every single data point is going to be essential moving forward. It's also going to be essential to be watching aspects like, as I said, oil. Now, back over here to the S&Ps. As I said, we're in a little bit of that like kind of free-for-all spot. The S&Ps and specifically the SPX. So the SPX, okay, right now you're literally on a 250-point move to the downside, okay? But what do we hold for the next week of trade? So I'm going to go all the way out to Friday the 13th. It's September 13th. Okay, exactly 7 days out. What's crazy about this is we're pricing in about $126 move. And that always shocks me because look, coming off a week, we just moved $250 and it ain't over, people. Okay, you're going to wish it's over here. You got 4 minutes left in the trading session. The S&Ps are down 100 handles. You're going to wish this marketplace is over, but it's not. 250-point move, and now we're actually estimating we move another, 120, 130. This is not set in stone yet, okay? This is the point where you got to be careful. As I said, look, markets, they just got very, very serious, okay? And they got serious in a hurry. We're going to look for opportunities in the midst of this volatility. Thanks, everybody, for joining us here at TheoTRADE. Have a wonderful weekend. Bye-bye.